On this video, I want to explain you the basics of banking. So first I will explain you what is a checking account and what is a savings account and the difference between them. And then on the second part of this video, I will explain you what your bank doesn't want you to know. The two savings accounts that they are hiding from you. So let's get started. First, what is a checking account? A checking account, it's basically the most basic account that you have when you go and open an account in your bank. This is where you have your money that you use to pay your daily transactions, your daily expenses. So if you go to the grocery store, you will pay typically from the money that you have from your checking account. Typically, you have a debit account connected to your checkings account. That means that if you use your debit card, the money will come out of this account. So if you pay rent, the money that you use is for this account. On your checkings, you are meant to use it for only your daily life expenses, not for long-term savings. So the money that you are supposed to have on this account, it's supposed to be quote-unquote small because it's for everyday savings. And the reason why you shouldn't have long-term money sitting in here is because your checking account doesn't pay you interest. Good. So that's your checking account. Now your savings. Your savings account, it's an account that is meant to hold money long term. That means, for example, if you're saving for a wedding, if you're saving like an emergency fund, if you're saving for a trip, if you're saving for a down payment for a house, typically the money that you will need to save for this event, it will take you a few months, a few years perhaps, to save this money. So it will be sitting there long term. Also, this is money that you will not want to touch. So that's why you don't want to have it on your checkings account. But the main reason you want to have a savings account is because your savings account, besides being separated, is meant to pay you interest for having your money sitting there. Now, what the bank doesn't tell you is that there's more than one savings account. You have a regular saving, which is the one that if you go to your bank and you tell them, hey, I would like to open a savings account, they will say, yes, fantastic, here's your savings account, and they give you a regular one. They don't give you the ones that are most beneficial for you, so they keep that information hidden. It's not that it's like they don't want to tell you, but they casually don't mention it because it doesn't benefit them. These two accounts are a money markets account and a high yield savings account. Basically, they are the same. They might have some technicalities of what they are different, but for you and me and the actual practical life, they are the same. Some banks will offer a money market and other banks will offer a high yield savings. This savings account, the difference and what you need to know is that they pay you interest. That means that your money sits in there and every month the bank will pay you money. With your savings account, the bank does also pay you interest. However, it's so small, like 0.015, that it's virtually non-existent. With the money market or high-yield savings, it will be slightly higher. For example, it can go from 1% or less to like 3.5, 4%. The thing with the money markets or high-yield saving is that the interest rate that the bank will pay you fluctuates. So that means they choose what it is. There will be months that it will be high, there will be months that it will be low, depending on how the economy is doing. And the bank can change this at any point, so that means you don't really have a say. But since your money will be sitting there anyways, you might as well have an account that pays you more interest than the regular savings. And that's what the bank don't tell you. They will use your money regardless. So how the banks make money is you put your money on these accounts and then they lend it to other people. So they make money and because of that, they pay you part of it. With the money market or high yield savings, because you're earning a higher interest, they know that you will have the likelihood of leaving your money there for longer, or at least you will not take all of it at once. So they have more security and they can lend it with a higher degree of confidence that they will have money at the bank. They do it anyways with your regular savings. So for that reason, we might as well have a high savings or a money market account. What you do need to know is in your savings, in the regular savings, there's a limit to how many times you can withdraw money. The same things apply to your money market account. The only difference is that with your regular savings, you need to have, for example, a 300 minimum amount of money in the account. With high yield savings or a money market, it's slightly higher. For example, in my case, my regular savings was 300 and my money market was a minimum of 500. I know virtually it might be nothing. $200 for savings is not much. So to me, it didn't make any difference at all. So because of that, I would strongly recommend, if you do not have a money market or high-end savings, go and open one. Although it's not much the interest that you get, it is something. It's better than a regular savings. So that is what the bank doesn't want you to know. First, you need to understand how to use your checkings correctly and your savings correctly. But then when you have a savings, don't stop at the regular savings. Go and have a money market or a high yield savings. Also, to be fully transparent here, what I did is I opened my money market. 4 months, it was great. The bank was paying me 3.5 of interest. And then suddenly 1 month, they dropped that rate. They dropped it to 1.8. So I went to the bank and I asked them, hey, I noticed online new people that open a money market account, they still get 3.5. Why did mine drop it suddenly to like 1.8? Also, that is a big jump from 3.5 to 1.8. So I was expecting the reduction of it to be more gradual. This was a sign that the bank was trying to basically outsmart me, and I'm sure they do this with every people. If you're not paying attention, they just drop the rate to pay you less money. So when I asked about it, their answer was, I will be happy to make an inquiry to increase that rate. What that tells me is, first, the bank is not fully ethical in the fact that I know they choose the rate, so it's flexible and they set a rate, but the fact that if I need to inquire to get my rates bring higher up, it means that they are just checking, they're like fishing for people that are not paying attention. So if you're not paying attention or if you don't go and complain, they will lower your rate. I don't think this is like the most ethically correct thing to do, but it is what it is. I'm an individual, it's harder to fight with the banks, but I do need to pay attention. So every time they do that and I go and say, hey, can we please bring this up? There will be cases that they will be able to, but at least I'm always checking to, hey, please give me the higher rate that you have for your money market or your high yield savings. So this is what you need to know, and this will set you up for being financially stronger. Don't stop here. There's more things to learn, but this is the basic that you need to know of how to structure your bank's account and then what savings account you should have. I hope you like this video. If you find it useful, please like it, follow this channel, and I'll see you in the next one.